Welcome to another video. Let's get straight to the content. We'll try and make it quick this time because there's not that much new happening. But first of all, we're going down right now, and yesterday we also went down. We've currently gone down from the peak about 4%, and today we've gone down quite a bit, actually almost 3%. And basically we're being rejected here from the 2025 yearly open from last year, which is right around this price, which is around $93,500 per Bitcoin. Hopefully we have to stay above this line, but the reason we're going down is pretty simply explained. I think because we have the CME gap right here. We have two CME gaps which are formed over the weekend when there's no trading activity on traditional markets, and these gaps 95% of the time do get filled. We have a gap here at 90.6 thousand at the moment, which is going to be filled in the next couple of hours most likely. And then we have another gap down here at $88.2 thousand per Bitcoin, which I think can also be filled before we do go higher again. Let's go back to this chart. So if we do go higher from here, and I've mentioned it, we have to of course break the 2025 yearly open, which has been a resistance here. There's been a resistance here and here as well. And once we do break from here above, I mentioned it a few times, the target is the 200 daily simple moving average, which is around about 106,000 at the moment. And for us to be going there, we have to of course also break some volume profiles, right? We have to surpass an area of volume, and let me go onto the daily here and put the volume profile above. We can basically see that we have, we have a lot of volume happening just about this point here, right? You can see the volume is high, so there's a lot of trading activity, meaning there's a lot of potential resistance and trades being placed at this point. So this is around about 98,000, 99,000 per Bitcoin. If we break from there, next goal is the 106 before I then think we're going to go lower. If we do go lower, I can zoom out a bit here on the weekly. And if I just go on the weekly here and show basically the current bull market, which we've been on, we can see that there's a lot of volume happening at around about this price range here, right? Which is on this box. You can see there's a lot of volume happening here because we had all of this trading going on. So if we do go lower, I think we're gonna find support at this point, which is, around about 69,000, which was the peak of the last bull market. But you can see this area here. You can see this area, there's not much volume happening, right? There was not much trading in the past, meaning if we go below, if we break down, we're gonna shoot down very fast. We're gonna not find support until we get to around 69, 70,000, which is where we have most of our trading going on, most support actually being there. And it makes sense, right? And usually we just go very quickly through these areas. We shot up very quickly, meaning we will shoot down very quickly as well. That is it. One more thing to note, I think we are still in a bear market. If I show you guys here actually let's put the weekly on. We have these bull and bear market support bands, right? And if I just put across a few more things, actually it doesn't show right now, but these bull and bear market support bands, every time, sorry, not the support bands, now I know why. We have to show the halving cycles, and the halving cycles basically shows that we are still in the same trend, right? We are basically at the end of these green lines, which is 80 weeks after the halving. The halving is the orange line here, and we usually go down. We're in a downtrend right now, and this always happens 80 weeks after the halving. It happened here, 8 weeks after the halving, we started going down. And usually we go down for approximately 1 year from the top. Let me pull out the ruler. From the top to the bottom, about 370 days, right? From the top to the bottom last time was also should be around about 370 days, 380 days, meaning right now we're going down, and I would expect us to be bottom out 380 days, 370 days after, which would be around October, November next year, when we will start buying again, start DCAing into our positions. That's it for the moment. Now, if we look at one more thing, which is the Bitcoin CME futures open interest. So the CME is just, it's basically here. the CME is the Chicago Mercantile Exchange, and it's the exchange that most institutional investors, such as hedge funds, banks, and large corporations, use to trade futures, to trade Bitcoin. And a lower open interest suggests that big money, like this institutional money, is sitting on the sidelines, and they are waiting to invest, right? The lower the open interest, the less contracts are open, the less people are betting on rising prices or falling prices. So it just means that currently the money is not in the market, most institutions are not trading Bitcoin, and it's very boring time in the market, of course. So if you're watching, congrats to you guys. So we have to wait, of course, for the interest rates to go down, and then hopefully we're gonna have a small push upwards and we can take shorts, but I think we're gonna go down for the next couple of months. Hope you guys liked it. See you guys next time. Bye.